Okay, this is a trading recap for the 5th of April 2026. Total gain was 5.8% for the day, which translates into 86 pounds relative to the our balance. So we'll remove that. A couple of trades were taken today. Firstly, I had to come up with a bias. So what I saw today when I went to the chart is the previous candle. After the big bullish one, there was a doji candle, so there is no like super clear direction. Drop down a time frame. We see the 4-hour, and the current one open was this one, which again doesn't tell us a whole lot. But I don't really take trades on these huge, like very high time frames. I'll look at my 1 hour and 30 minutes and try to mark up stuff there. So about 9 o'clock I go to the charts and I see that there's been 1, 2, 3, 4 consecutive bearish candles with not huge amounts of volume, but the traffic on the left is kind of clean, and we have some kind of a support here formed. So my idea with the first trade was that if I get a closure on the 15 minute, this is what the most recent support created. So if I get a candle to close down there, then I can take an easy trade, because that would mean there's a lot more possibility for price to fall down and touch this area before going back up. But still, at the same time, the idea was there, but I did not 100% like how it looked on the structure wise. So let me enlarge this, get rid of that other window. And I took this first trade. This was taken on my phone. I was still not on my PC, so that's why the stakes are it's just 3, because I can't exactly see. I'm usually aiming to risk 2%, but this time I just have to open something in and make sure it's not over a lot over 2%. The trade here was after this candle started breaking lower than the previous one. I took a sell, placing my stop loss just above the candle, and it got taken out basically by the next candle. Then is this one. I see the price just tapped me. The wick just was just slightly higher than the previous one, so it was enough to tap me out. Then next trade, I see that it closed very, very bearish, so this to me speaks that my idea is still valid. So at this point I'm taking another entry here before the candle closes, placing my stop loss again over here. But see, the stake size or the lot size is the same, therefore the stop loss would be bigger. This is something I should have done. I shouldn't have done like that. Get the fuck out of my face. Yeah. So here's the trade. If I drag it up here, oh no, actually it's fine. The stop loss. Yeah, it is fine. I'm aiming to risk about 2%, so that's 1 point something percent. That's fine. But once when I see something like this, like a big bearish candle closing, then again a small bullish one, and another candlestick closing with its body covering the wick of the previous one, this to me means that there's big volume, so I need price to start going down right away. But it didn't. It just started climbing up again. So instead of me waiting for it to go back up to hit stop loss, I just took it out, because I did not like how it's developing. I just wanted it to smack down because that's what I've seen, that's what I anticipated. At this point it didn't do it, so I decided I'll wait for some structure to be created for something that I much rather see, much rather like, and then the next trade comes at play. I waited for it, it came back up here, and it respected this support, this support that became resistance. A big bullish candle, then a bearish one rejecting the support. If this candle was if this candle didn't exist, I probably wouldn't have taken it. But what I really liked was this wick here. This wick touched again the resistance and also touched the EMA. I used the 14 and the 200 EMAs. It touched the EMA, touched the resistance, and it closed back bearish, leaving this rejection wick. So when the next candle started going down, that's when this trade was taken. This was big. I already was on my PC, so I used magic keys, and that calculated that my stop loss to here, which is 60 pips, should have been according to the stop loss, the stake size would be 5.10, 5.1. So I just opened it, and like in 15 minutes the drop was huge. Like I was aiming for a wick on the left hand side, so I was disregarding this support. I wanted to see the next one touched, and that's what happened basically. Price fell down. My take profit was somewhere around here. It barely almost touched it and started returning, and then I just took it. So that trade made around 10% return. So I risked 2% and made 10, which was very, 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 very good. Maybe I should have stopped there, but I am trying to teach my brain not to be overwhelmed, or more like I'm trying to not be affected by a previous bad trade or a previous good trade. I'll still try to see still try to look for setups and not if something shows up, I'll take it. Doesn't matter if I've taken a big loss before that or a big win, because I want my psychology to be unaffected by any of those things. So next trade here. I was already at work at this point, I think. Was I? No, I wasn't. Okay, I wasn't. Still on my PC then. And after this huge move happened, it returned. And similar thing to this happened here as well. We get a rejection off of something here. I'm not sure if it's, oh yeah, it's relevant from the left side. There's a resistance. The price respected it here, printed a bearish candle, then another one, but I missed. I would have usually entered here as this candle is breaking lower than the previous one. So I get a touch on the resistance, then a candle printing my way, and when the next one breaks the low, I'll just take it here, place my stop loss over up there. But I didn't, I missed it. So once the next candlestick started going up, I anticipated this to be a wick. So once it reached this area, I just sold here, and my stop loss was put up there. And what I did was, once it started going up, I closed half here. Now, once it broke the high of this candle, I closed half. So this is half of the trade. This is the other half being closed at stop loss. Next one. What's that? That's still a sell. Oh no, that's not a sell. That's a what? Oh, that's the oh what the okay. I'm not sure what this is. What is this trade? That's a sell. Opening direction buy. Yeah, I was confused because I was looking at the closing direction. Anyway, once these candles started developing, I went to the higher time frames, and it kind of looked to me that after this huge rejection and this candle printing bullish, maybe this was I took that as a sign that the price maybe is trying to start moving up. There is a nice support here, a nice rejection wick, then a smaller bearish candle confirming that the volume is dying down, that the bearish volume is dying down, and then a bigger bullish candle breaking highs of the previous two candles. So I took a buy on the 1 hour time frame. It makes sense, but I didn't take it there. I took it, I think, on the 30. Once I got a nice this closure here back in that range, I took it on the next candle once it started going up. Not perfect trade. I have a rule where I would think before taking a trade, would I take this and risk $1 million on it? I did not think about this before taking that trade, so no, that was definitely a dumb move. It was just touching the EMA again, so and it's in the middle of a range, so that's a no. Bad trade. Next one, a buy. No, that's a sell. Okay, let's jump to the 15-minute. This trade, where is it? Yeah. So once I saw that the candlesticks are starting to print sideways again, and it's giving more indication for sells, like there's no highs really broken here, that this level stayed intact, and this candle started printing. It broke. This candle started breaking the lows of the previous candlesticks, and my idea was bearish to begin with. After this move, I thought maybe I would get a retracement and then I'll take it more down. It broke this low, so once it came down here, I just took a sell, and the stop loss was kept. I think, around here somewhere, which was a bit high. I could not. I did not measure first how big the whole thing is. So I think when I opened it, because the lot size was too high, which was how much? It was four stakes. So on four stakes, this would have been too big of a loss. That's huge for this account. So I moved it down here and said if it starts moving like against me, I'll just dump it. Don't care. I don't want to have big losses. So that's what I did. It started going back up. Once this candle started printing, breaking highs here, I just took it out. Next trade. I guess these were. This was a few minutes later. It was taken at after closing the previous one. So this, this trade here, this one that we just spoke about, I took it out even before the candle closed, just because the lot size was too big. I didn't want to risk it. I preferred to wait for something actual to happen that I like, which should have been the case to begin with, and this trade should have like never been taken. So the next candle, not the next candle, was once I closed it, once it started moving up, as it was closing, I took another sell because this was like in the end of the candle itself, in the end of the candlestick. So this was opened at 3:14 and 45 seconds. So there was 15 seconds to this candle closed. So I knew it's gonna 99% sure it's gonna close bearish. So I took it there and kept the stop loss really tight, because this is a very easily invalidatable setup here, because we have a support formed. The prices are rejecting from the support and from the EMA. So if the next candle breaks any of those and the highs of these candles, that idea is no longer valid. So the next candle opened and it just went up and took me out basically here, which, yeah, it's a good thing, because I would usually put a stop loss above the structure, which would have meant losing more here. This is part of the same trade, because there were I guess I closed 50%. I can't remember. I think I closed 50%. So that's the same trade basically. Then this was a buy taken once this big 15-minute candlestick closed. I anticipated it to continue moving up and confirm my previous idea on the 1 hour that this is a big rejection, and this candlestick here, as it was forming, it was bullish. Once it was over here, it was bullish and it broke the high of the previous one, which was a small bearish candle. So the bullish bias was becoming dominant here for me in my brain. A little messy, but that's like the first day on a live account, so I guess I'll forgive myself for these mistakes. So it broke the high, came back down, took me out. Simple as that. 15-minute trade. I took it on this candle once it was forming, put my stop loss just below it, so I didn't want to risk anymore, because it's a messy range, so it's not worth it to it's not worth it to put, when you're playing in a range, it's not worth it to put your stop loss outside of that range, in my head, because I don't like playing in a range to begin with. So if I'm wrong about the direction, I want to find out that I'm wrong very quickly. So that's why I try to be precise with entries that I really like, and I'll put a small stop loss there. And then the last trade for the day came about, and at this point, once all of this thing developed here, I just moved my zone, my resistance zone, to be relevant for all of these rejections, and it was just perfect, because the candles were rejecting off of that zone and off of the EMA as well. So what I did, yeah, this should have been taken a lot earlier. As this candle closed, then this one started breaking the low. I should have taken it here, but I was already at work. I could not react that quickly. So what happened is, this candle, not only this candle closed, but this one as well. So one good bearish candle confirming bearish bias, breaking, reclaiming this EMA, closing with its body inside the EMA. Then I get this candlestick touching the EMA again, retesting it and breaking the low of the previous one. Then we are basically outside of that zone again, already. If we mark that as a box, like a no trade box, no trade range, this candlestick broke and closed outside of that box. So at this point, I just wanted this candlestick to make a high wick. I was thinking about it to enter as it was moving up and have my stop loss over here. But I prefer not to do that and just wait for it to make whatever wick it wants to do. Because at this point, this whole profit of 10% was already eaten up by all of these losses here. So I did not want to take one more trade with stupid confirmation that's not even there. So I waited, this candlestick went up, and as it flipped bearish, I took it, 4 stakes. On 4 stakes, this was risking about 2% of the account when the stop loss was kept here above the wick. And my take profit was just this wick here. I could have marked these instead, but I just didn't want to risk. I didn't want to risk another rejection from these levels, so I decided just to take it there and be happy about it and have a good, just call it a day there. Just call it a day. Don't worry about any more trading for the day. And this is exactly what happened. I took it, price fell, I closed it here. That was very quick trade as well, 5 minutes, like 4 or 5 minutes. I took it and that's all. So we end the day in 5.8% profit. Okay, I'll see you tomorrow.